Good morning, traders. It is 8:01 a.m. Chicago time on Tuesday, the 11th of April, 2023. Can you believe we're barreling into the middle of April already? Time is just flying by, or I'm getting old, or both. This is episode number 2446. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's the pre-market summary sheet from Convergent Trading. Again, we're opening mixed. We keep opening mixed and then moving away from where we are. And the market's really in an anticipatory kind of stance, and that's where we find ourselves this morning. We did some interesting things yesterday. We'll talk about, but let's focus on what's in front of us. Mixed market overall. The risk posture is mixed. You can see that Europe had a bit of a pop, but Europe was closed yesterday, so it's just catching up. So just keep that in mind. The Russell leading the pack today, so small caps strong this morning. And then the S&P is basically unchanged. The S&P is trading right on top of yesterday's settlement, which was 41.36 and a quarter. And so, the NASDAQ's about one rotation away from its settlement price, a little bit weakish. But overall, not much to say here other than the fact that tomorrow we get some big releases. We get U.S. CPI tomorrow and the FOMC minutes, which the market will pay very, very close attention to. It seems like the Fed is in the stabilizing camp, in the holding camp now, and the market's kind of anticipating that, so it's not letting go of these higher prices. Chinese CPI was lower than expected, so was PPI. China remains the only major deflationary force in the world economy right now. Feds Williams, the market policy expectations are tricky to measure, and he doesn't worry if market's view on rate differs from the Fed's. I would worry because the market's always right, it seems. Also, last night, Bitcoin hit 30,000. Keep getting alerts from my crypto apps that, things are moving 5% plus. Worldwide Q1 PC shipments fell by 29% versus last year, according to the IDC. Alibaba reveals new Chat GPT style product, and as a result, the Chinese government's making moves this morning to secure any AI tools created or used in China. Very interesting. They see that as a security risk. Newmont makes final offer of $19.5 billion for Newcrest Mining. Amazon to start charging for some returns at UPS stores. That came out yesterday afternoon across my news feed. This morning, we do get the IMF. The market was kind of anticipating this. The IMF growth reports. Where is it? It's supposed to come out this morning. We have Treasury Secretary Yellen at 11:30 today, and then we have the crop report at 12 Eastern. Fed's Goolsbee at 1:30, Fed's Harker at 4, and then the API crude oil stock change at 4:30 after the close, and then ECB's Villeroy at 5:15, Fed's Kashkari at 7:30. And then Japan's PPI month-on-month for March. Looking at the S&P, and again, I want to remind you that these rotations are updated once weekly, and the rotations have been steady or falling. The rotations in the NASDAQ have fallen from about 26 and a quarter to 25.75. So things, volatility is collapsing a little bit. So we need to be aware. This is kind of the kind of environment, when we see rotations dropping week on week, like we've been seeing, we get generally we get rallies. Like when rotations drop and the market gets quiet, the market tends to rally. The rotations expand rapidly when the market is falling. Pay attention to your ranges. This is not the expected range in the S&P. Don't mix that up. This is 1 sigma. So you can see here the asterisk is explained down below. It's the daily range based on 1 standard deviation of 252 days. So we look at a whole year, and we're giving you the edge of 1 standard deviation. This means that anything below up to 79 is considered relatively normal. It's 1 standard deviation, represents 68.2% of the data set. But that doesn't mean that that's the mode or what we're expecting, the median or mode. One of those kind of gets a little bit closer to what we expect for the day. Currently, we're expecting around 42 points in the S&P per day. Looking at the S&P itself, balanced market. Looking at the stats first, I'll show you charts in a second. Balanced auction currently. The market, the S&P opened sideways, completely sideways. It popped higher on the European market open. It pushed to 41.50. Basically, the high is 41.49, and then it dropped right back to 41.32, which is last week's settlement price, basically. And then it is holding steady now in the middle against settlement. Like I said, it's basically unchanged. The inventory, 67% long, meaning 67% of the volume at price is above the closing price. 159,000 contracts have traded, a little bit heavier than yesterday, but still relatively light. Our expectation is somewhere around 220 to 280 thousand contracts by the time the market opens. There are 20 minutes left here. It does pick up towards the open, but this is very light volume. And then the range is also pretty light. You can see the range mode is 31 points. That's the most common range. We generally expect the range to be between 26 and 31 in the ES. We've got 16 and a quarter, which is very light. So expecting yet another lazy opening, and then we'll see what it does from there. Let's look at our charts. So looking at our charts, we find, so yesterday I got it completely wrong. Yesterday, what I saw was a weak low, and it ended up taking a low by a bit, I believe, but it never breached and it never went and took the 96.50. And I expected it to respond. I expected it to open, respond a little bit. I expected 41.14 to give it some trouble, that region there. And I expected it to push lower, test the 4,100, and break lower, if you recall, to get back to 88.50. That was the primary scenario yesterday. Did not work at all. What we got yesterday was a lot more interesting in that we battled our way back to the single prints from last Thursday. Remember, Friday was closed. There's no RTH on Friday. We battled our way into the 41.14, and then we kind of consolidated in the morning, and then we managed to start to squeeze through the single prints, and we built another double distribution. This is very unusual, by the way, that we build 2 days of double distributions like this. We built another double distribution and took back what we did last Thursday. The buyers have won this fight, and I'm going to tell you the buyers are in control currently. We have not given up any territory near the high, and you can see that we have squeezed a little bit higher. The green tag right here is the overnight high. The green tag below is the overnight low, or the session low so far. And you can see that we're sitting right in the middle of that currently. We're just not giving up any territory to the downside. I think sellers are at risk. There was a huge opportunity here after Friday's number and the market falling yesterday. Remember, we had this kind of parabolic move down at about 6:15 or so Chicago time, 7:15 Eastern, and to me it looked like there was a continuation coming on that impulse, and it was a news-based event. It was clearly a news-based event. And we ended up getting back to the SOC of that news yesterday. I talked about this briefly, but I certainly didn't expect us to take back that much selling on the open. So we actually managed to go right back to where that news event started from, and we finished at the high. So we have a double distribution with a high close. This is very likely to continue to creep up. We have some single prints just above us. We have some singles to kind of clean up above. And so the expectation is that, the single prints are like at 41, 43, something like that, which we cleaned up. We pushed through overnight, but we need to see those get cleaned up during the day. And to me, this is very likely to continue higher. However, we do have CPI tomorrow, major input into what happens next macro-wise. And we have the FOMC minutes where we get to read about what the committee has decided or is basing their ideas on. And that's likely to inform the market as to what to expect next. So really important stuff here. We did have a nice run, pretty good run. Some weak structure in here. We talked about it. We tested to the tick right there. We tested to the tick right there. So we ran up. We put in a nice peak with a sell-off, a nice rounded top, and now we've got a nice rounded bottom, and we are likely to continue this rotation higher. Last week's high was 41.63-ish. 41.63-ish right here, 41.63 and a quarter, if I can just read that little number there. And that's really what's being targeted. If you recall, 2 weeks ago, I talked about 41.60 being a key target above, and we hit that last week almost on the nose before we sold off. And that's where I started to look kind of bearish or think bearish, and expected this thing to float back to at least the 40.26 way down here, and it's just got no interest on the sell side at all. So the treasuries are moving higher, which means that their yields are expected to move lower, and the market is pricing that in already. We don't have an FOMC meeting this month. The next one is on correct me if I'm wrong, the next one's maybe May 3rd is the number that comes to mind. So we have a lot of data, but no resolution until the beginning of May for the next FOMC. So every piece of data that comes out between now and then that has a pricing component or an employment component is going to be very, very important. And so we're likely to continue to be in this kind of choppy, hold steady, big move, then hold steady kind of environment. It sucks for trading. It really does. It's been like this now for about 2 months. But this is the macro environment. This is the market regime we're in. It's a macro regime. One of the things to remember is that Friday we start to get earnings. Earnings for this round are expected to be relatively negative. Overall, there have been several articles in the Wall Street Journal about the expectations for earnings this time around. So it'll be very interesting because earnings are the only thing we have that tells us how the micro components of the economy, the individual companies are doing, what's happening on the ground, right? As opposed to these Department of Labor surveys and things like that. What's actually happening on the ground, and earnings are going to tell us a lot. So we're expected to have We're expecting to have some pretty good movement on the earnings, which start this Friday for Q1. And so this will be information that we're likely to price in. So that's that. Let's get to the active chart. The active chart, here's what you got yesterday. Yesterday, I didn't trade at all. Unfortunately, I had an issue with an appointment that went on for 4 hours. So I was telling the folks over, the traders over at Convergent Trading, that I did not see a clean place to catch the entire run. I could see that we breached the IB right there. I could see a pullback to the mid, so that's something I'm going to watch for. I'm going to watch for an entry in this zone right here. That entry was really nice, but you hold it, you push up. There's a secondary entry potentially against the IB high, VWAP, and mid, full session mid as well, but that would have resulted in a stop out right down here, only to get whipsawed and go right back up. And now you're looking for breakouts and pullbacks, which provided an opportunity right here. And that's all she wrote. From there, it's just a grind stair step up into the close. Pretty good delta. Delta and price moved well. This is another piece that tells me that buyers are likely to be in control, because we see that the aggressors, the buyer aggressors, which is what cumulative delta is measuring, how much buyer, it's the net effect of aggressive buyers versus aggressive sellers. And if aggressive buyers are active, so the delta is moving up and price is moving up, they're making progress, and that's likely to continue, okay? But if aggressive buyers continue to push higher while price sits sideways, it means that somebody's absorbing that aggression, and as soon as that ends, it causes a long liquidation, pretty aggressive long liquidation. The same thing on a downtrend. If you're looking at price moving down, delta moving down, and then price starts to put these big dots you see here on Edge Pro X, like these here, you start to see dots getting printed, and the market's printing. The delta is aggressive to the downside, but price is not moving lower. You're looking at a short squeeze. These are classic order entry scalps or order flow scalps. And but yesterday, the point being that price really moved with delta, and it's expected to kind of continue in that direction. Let's look at the delta in the overnight session. Here it is, just sideways, no participation by the very large lots, sideways, pretty much very large lots, control by the small lots, and the small and the large are moving in different directions. Expect with a balanced market, balanced overnight market with the full session VWAP, full session mid, and the overnight point of control overlapping each other, we're looking at a pretty noisy open. So another day where we have to sit out for the first 20 minutes or so. I'm only telling you this to save you money. More people, like just looking at my own traders' history from a while ago, looking at performance metrics for a large number of traders, I would say, don't quote me on this, this is my opinion, I would say 2/3, if not 3/4, if not even higher, of all traders that I've looked at end up net losing money in the first half hour trading, okay? So when we open and balance here, I'm trying to save you money by telling you just keep your hand off the mouse, let the market pick a direction, and then go. It might open in balance, but immediately push. So we might open in an open test drive or an open drive type opening, and that's information we can use. Now we can trade pullbacks in the direction of the break, especially if it's moving away from balance. That's initiative behavior. We want to participate in that, but that's not what's expected. At the end of the day, we have to pay attention to what the market says, not to what I say. So here's the big picture, okay? So we've tapped this 4,100, we've tapped it again, and we tapped it again yesterday. It's just not able to come through, and then we ended up taking out yesterday's high at the close yesterday. This is why I'm bullish today. And then we have a weak structure above us with the single prints and last week's high at 63 quarter, whatever. It's too close with very weak defense. There isn't a lot of volume to fight against here. This is why I'm expecting this thing to just continue to squeeze higher. Okay? I'll leave you with that. That's 22 minutes of me yappity, yappity, yappity. One thing I want to leave you with here before you run out, one thing I want to leave you with here. You're not expected to trade every day. You're not expected to have setups every day. You're not expected to have an exciting market that triggers your dopamine response and your adrenaline response every day. It is naive to think that you should be trading every day. It just doesn't work that way. I've been doing this for 23 years, and I'm going to tell you that on most years, you make the majority of your year's profits. If you're profitable, you make those in a handful of days. The rest of the time, you're grinding with everybody else. You're just coming in here, you're slapping together, whatever your expectancy is. You're slapping that together, your expectancy times the number of contracts you trade, and you're just grinding out days. So a $100 winning day for you, for a trader that's swinging 50s, maybe a $2,000 day, and that's just as good as it gets. And it sounds okay. It sounds like great, $2,000. I'd love to get that every day. You don't get that every day, first of all, and you have to account for the losses on a 50 lot if you're that size trader. So don't sit here and think, I'm going to give up, like there's nothing for me to do. Let me go find crypto and trade there. Let me just try this thing. Let me look into some scalping videos on YouTube and learn how to scalp because this is a scalping market. Don't do that. All you're doing is you're setting yourself back through another learning curve. I don't see a real difference in the way the S&P trades versus the NASDAQ. So this isn't an S&P problem. We should all start looking at the NASDAQ. It's just that the market is a machine that prices value. That's its purpose. It prices value. And there's just nothing to price right now because it's all out in the open and there isn't anything special. And everybody's waiting for what the Fed will do next and how these companies will operate. So I'm taking these 2 extra minutes to warn you that if you're looking for a little, high off of trading, I would recommend you go to something that is cash-based. I would go and recommend looking at event contracts, for example. Call the guys over at EdgeClear to get some more information on that if you like. Just a reminder, I'm the owner of EdgeClear. But don't risk trading futures out of boredom. You again, look at event contracts. They're cash-based. The max you could risk is $20 per contract in cash. And you can take a position on the market without having the risk of being stopped out. And you either are correct by the end of the day or not if you feel like you have an opinion that you want to trade, but don't have proper setups. Okay, so that's kind of this is kind of like moving from minis to micros. Event contracts are even smaller, and they create an opportunity for that. Not that I'm plugging them, but I'm simply saying if you have an itch to trade, don't mess with your statistics and your performance. Don't do it in futures. You'll end up regretting that in most cases, okay? Good luck today, and I'll catch you tomorrow morning. Take care.